This is the Daily Market Comment by Harlambos Bisuros. I'm Maria Pachurdiz. Thanks for joining us at XM.com. The U.S. dollar took a break at some point yesterday, with the dollar index pulling back after hitting a new two-decade high. The currency that benefited the most from the dollar's breather was the British pound. Its traders entered long positions after the currency hit a new 2.5-year low, and added more in the aftermath of the announcement that Britain's Foreign Secretary Liz Truss will be the country's new Prime Minister. The reaction at the time of the announcement was not huge, but the fact that in her victory speech she reiterated her plans to cut taxes and deal with energy bills may have been a reason for celebration. From an economic standpoint, if indeed those measures come into effect, they are likely to add more fuel to inflation and thereby add more pressure to the Bank of England to raise rates faster. Expectations of faster hikes by the Bank of England may be positive for the pound in the short run, but a failure of the bank to meet those expectations due to recession concerns could come as a disappointment and thereby result in another round of pound selling. The euro was also able to stand on its feet at some point yesterday after hitting a two-decade low due to Russia's decision to stop pumping gas through Nord Stream indefinitely. European shares stayed under pressure throughout Monday's session on fears that the energy crisis could worsen, which suggests that the euro's recovery may have been the result of covering short positions ahead of Thursday's ECB gathering, as money markets assign decent chances for a 75 basis point hike. Despite European shares extending losses yesterday, the picture was different today in Asia, with China's Shanghai Composite seeing decent gains after Chinese policymakers promised to make renewed efforts to revive the wounded economy. However, considering that the world's second-largest economy is still bleeding due to a battered property sector and a resurgence of COVID, and also taking into account the aggressive mood of most major central banks in this tightening cycle, it seems unlikely that China's measures will place a floor below global equities and other risk-linked assets. This may be evident by the behavior of oil prices. The black gold gained somewhat yesterday after the OPEC Plus group decided to cut output by 100,000 barrels per day in October, but the fact that the gains were limited and short-lived suggests that demand concerns remain elevated, and China's risks are one of the main reasons why those concerns exist. This is today's Daily Market Comment. Thanks for joining us at XM.com.